Good evening, everyone, and unless you're in Perth, say good afternoon. Thank you very much for joining us today. Look, we're running a bit of a different session today. We're going to cover a bit of territory. My name's Patrick Nelson. I'm the MD of Reach Markets, and I'm joined by Ivan Cherrylove, Managing Director of Tradefloor. And we've also got someone who trades through our platform, an accomplished trader, Nathan Germain, who's joined us today, and we'll come back to Nathan in a little bit, but we thought we'd invite him along. He's someone that's traded successfully through the current market and is a well-accomplished trader, and thought we'd bring him on to talk about his experiences trading over the last 4 or 5 weeks, the sort of trading he's been doing, and some of the tips that he might have just as a trader around getting fills and and how he's approaching the market. So Nathan, thank you very much for joining us.
Thank you. Thanks for having me.
Excellent. So look, there's a few things to cover today, but I guess the sessions that we're running at the moment, we're just covering off a range of different topics each week. Next week we are going to invite a few more traders on. If anyone's on the session who trades through implied volatility at the moment and would be happy to join as a guest panelist, please just put that into the chat box. I'd love to have you along. And for anyone that's on the session tonight who wants to have a trial of our platform, all you need to do at any point in time is type in yes into the chat box, and we'll get you set up to have a 30-day trial using our technology. So, for those of you that are tuning in for the very first time, our implied volatility platform, the Reach Trading service, is designed around giving you the best technology that's available for options traders in Australia. It's been purpose-built by options traders for options traders. We've focused on and spent a lot of money and time, energy and effort in building specific tools that can help give you an edge if you're going to be trading options in the Australian market. Right? So if you're going to trade successfully, technology is important, very, very important, and it's something we invest in deeply, but also the support to be able to use the technology is particularly important. And sessions like tonight are things that we do regularly. Tomorrow we have a trade group, which is for our members. Again, if anyone's on the session tonight and wants to start using our tech or doing some more learning and so forth, there's a full education platform in our platform that's been built in, all the education we put together, and access to our trade groups and the like is available. Again, all you need to do is type in yes, we'll give you access. All right, so for us, if you're going to trade successfully, you just need to have the best tools and the support and information at your fingertips, and that's very much been around what we've put together. So tonight we're going to go through a number of topics. Any advice contained in the presentation, though, is general only. It doesn't take into consideration your personal circumstances, and you need to decide for yourself whether it's appropriate for you. Past returns are not an accurate indicator of future returns. And if you're going to trade options, you need to understand if you're trading them, it's risky. You need to know what you're doing. Do not go in underprepared. All right. Now, in terms of how to trade the current market, it's a tricky market. It's unprecedented, the falls that have occurred, and we definitely want to be on the right side of the overall market trend. We saw the market up at highs back in recent times, and there have been very few companies that if you wanted to trade a bullish move that you've had the opportunity to do that with. Coles on some trades, but it's sort of consolidated at the top at this point in time. There have been trades there. It has been one of the few stocks that's broken a 52-week high. But if the old saying goes, if the only tool you've got is a hammer, you'll find nails. In this case, there have been significantly better trades out there than just finding bullish trades. If all you can do is trade bullish, you will find bullish trades, but realistically, in this market, you need to be looking at a balance of what it's giving up. Now, having said that, trading on a bearish outlook, using the traditional technical rules in this window of time that we've been trading in has been very, very difficult. And I might just skip out back to have a look at the XJO, and let's jump in here. should jump off that page. You know, the market overall has, you know, this has been the sell-off. So from the top of the market, looking at it, you know, looking at some daily charts, it's been sort of 4 weeks move, gave up 38%, I think, from top to absolute bottom. GFC was, you know, 47 weeks to give up 32%, right? So, you know, unprecedented, the falls. And if you go back and look at charts of all previous black swan events, which are the sort of things that have been published recently, people searching to try and find something to compare this move with, you just can't, right? It's fallen quickly. And why? Well, you know, I think it's the unprecedented uncertainty. We're dealing with something that, you know, in our in the times of, well, most of us been looking at the market, what can you compare it to? You know, I'm sitting in my office now, staring down Flinders Street, which is, you know, if at any point in time I look up, that's what I see. I can see one car, you know, at a time where we would normally be in peak hour traffic, bumper to bumper, right? And you know, so that this is coming at us from every angle, and we realise that you know, markets are reflective of what future valuations will be, and you know, there is value that, you know, you could point to, but I think the overriding factor at the moment is simply that higher level of uncertainty that exists. So trading it using the technical rules that we used at the start of the move would have made you a hell of a lot of money. But then identifying new trades, trading on that directional breakout trades, you know, volatility being so high, is challenging to do. Not necessarily the picking direction part of it, but how does that fit in with the similar trading plan that you would have had prior? So, you know, it is a time to adjust, to think about how you're approaching your trade and what you're going to use. You know, we for those of you that joined us at the ASX in Sydney or in Melbourne here for our options meetup, what was that? How long ago was that? 4 weeks ago, Ivan? I can't even remember. It seems like
I don't know. I was in bed. I was in bed with coronavirus.
Yeah, well, you did come to the Sydney event, so I think that was 4 weeks ago. But at that point in time, there was a presentation done by the ASX, and they were talking about the positions that people were in and the amount of options volume that had come into the market from the funds managers. You know, the most of them were short vol, and volatility was 11%. I mean, it's been as high as 70, 80%, and it's, where is it sitting there, roughly in the 50s, 55 at the moment. You know, so the type of trading, type of positions people have taken have really, if you haven't taken that, well, one, a lot of hedge funds have blown up in the last couple of weeks. A lot of the professionals have been on the wrong side of it. Most of the jawboning that was going on, if I run my mouse over here, people sticking their heads in the, you probably get your Dow theory up, Ivan, of just, you know, people just sticking their heads in the sand, denial, and then absolute capitulation coming through here, all right? And I'd be interested to see what your thoughts are. I haven't spoken about the market for the last week. Not that things should change that quickly, but you know, I think for me, I think that we might see some consolidation. Mark has pointed out that this is the first 2 bullish days in a row in 30 days. That's interesting. But we are due some relief, and it would be good to see some sort of consolidation. And that will give us some interesting trading ideas, but we're probably still looking for some leads there. Ivan, what are your thoughts? Maybe Ivan is muted. Yeah,
having some issues with my stuff. Actually, I think it's probably it's interesting. You know, the way that we trade is a little bit different to the way that Nathan trades. And maybe this would be a good chance for me to ask a few questions.
Yeah, sure.
No, I'm struggling. Hey, so Nate, just really quickly. So, firstly, are you still bearish? By the way, I mean, you were saying you're expecting like a 50% drop off, right?
Yeah, I'm pretty bearish, looking at maybe up to 56% off the high of 7160, I think it was. So yeah, fairly bearish. Obviously, last couple of days, as Patrick said, we've had a bit of a spike, but that's kind of typical in these kind of markets that we're experiencing at the moment. It's not uncommon. I think Ivan and Will were talking about the other day. Some of during the GFC there were some really big up days, and we've now seen sort of two in a row, particularly in the US overnight, a big record up. So yeah, as Patrick said, you kind of expect a bit of consolidation now, but I think nobody knows where the market's going to go up or down. But I'm in the bear camp.
So I think maybe just for the benefit of everyone, interestingly enough, I think I really am struggling with that. So Nathan runs a small fund, which is an options-only fund, and you're typically a seller of options. You typically trade spreads, and in quite good size. And
yep.
I don't remember exactly, but you were effectively, you had spreads on, sold spreads before this move even started, right?
Actually, yeah, I did have a few, which is obviously not ideal, particularly if you've got put spreads when the market swings against you. But yeah, I do a lot of hedging with futures as well, so it's sort of another element to the strategy. But I solely trade XJO, so money trading the index and looking for directional-based trades. So that could be legging into iron condors using bull put spreads and bear call spreads, which is what I'm trying to do, and what I've been trying to do in the last couple of weeks. But yeah, as Patrick was saying, the some of the moves we've been seeing are unprecedented. So getting the predicting trading ranges as to where you are willing to enter a spread or in puts or calls is a really tricky one.
Yeah,
Nathan, how long are you staying in? Are you setting your trades up and staying in them for a period of time? Are you trading off the move, volatility dropping out, time decay? What are you like? How are you approaching your spread trades?
Well, under normal circumstances, I'll aim to hold them till expiry, or I may buy them back, depending on where the market's moved and how many days to expiry. So if I do that under normal circumstances, I can sort of get away with it. But in the current environment, sort of 2 weeks into this fiasco, it's almost next to impossible. So one of the biggest bits of advice I'd have to people trading this market is, when you enter a position, you almost need to assume that you may not be able to close it. And that's because of, obviously, market makers have potentially been burnt and just disappeared. And there's not a lot of counterparties on the other side of trades. And just while we've been talking, I've been having a look at the open interest in XJO options on the weeklies and even the monthlies, and there's nothing. There's compared to what it usually is, in anything that's even close to the money, maybe with 1,000-point range from at the money is it's hardly any. So it's a very, very tricky tricky time to navigate. And as I said, it's particularly like when you enter a position, you almost have to assume that you may not be able to close it. So you have to have an alternate plan strategy. Yeah, and for myself, I'm using futures to do that. So I can sort of cope with not being exercised on a position as a worst case. And I'm selling credit spreads, so I'm obviously selling a spread and hoping that it'll expire out of the money or worthless. So if I do get exercise, I've got a hedge in futures. But yeah, obviously everyone's sort of using different strategies.
So Nathan, can I ask a couple of questions around that? So
Sure.
mentions that at the moment, when you go into a position, it could just get away from you. So you go into the trade understanding that to be the case. Does that mean that you're trading, risking smaller amounts of capital when you're doing your trading at the moment, or is everything stay the same?
Yeah, probably slightly smaller than usual. So, and the other thing is, so when with the spreads that I'm entering, I'm looking at, rather than looking at the margin requirement up front, I'm looking at the total at risk and just assuming that basically that will be my margin, because the other thing is in an illiquid market such as now, the last thing you want to be doing is trying to either open more positions or close things back to satisfy margin. So yeah, with the spreads I'm using, I'm only looking at the total at risk and then looking at what I'm holding. Unless, I've got at times, may have had a lot of call spreads that are, now so far out of the money that they don't even count.
Now, can I put you on the spot and say, looking at the market, would you enter into a trade if the market was open at the moment? Let's just say that was the case. Is there a position? Would you enter into a bear call or a bull put as it sits right now?
Probably a bear call.
Bear call.
Yeah.
All right.
Yeah. Just based on the fact that we've had the two bullish sessions in a row, and typically in this kind of market, that's kind of a rarity to get to. Even if you get three, it's kind of, it's very uncommon. So I'm looking for a bit of consolidation in the next couple of sessions, that's for sure.
And
I think just to quantify that a little bit, just for people to I guess to get a bit of an understanding of where you typically trade. It's not exactly the money bear call spread, right? So you're going to give yourself a bit of space.
Absolutely. I'm looking to keep that as far out of the money as possible.
Yep. Sorry. Why don't we price one up, Ivan? That's probably the best way to do it. So
Sure.
Time to expiry, Nathan, what would you be going for?
At the moment, only weeklies.
You're going weeklies. All right. I'll set this up and then I'll take us back. So
having fun.
Sorry?
So 9th of April, would that be about?
So the 2nd of April.
All right. And what strikes would you be looking at for the sold leg?
Probably about 55 to 5,600.
Lots of clicking there, Patrick. You don't use any of that, right? You don't use the strategy builder. You go straight from the options chain, right?
No, I do. I use the strategy builder.
Okay.
Good.
It's
what would your bought leg be at?
do you have 55 for the bought? Sorry, for the sold, and then 55, so 100-point spread.
56, 55, 56.
Yep.
Yeah. Okay, and maybe I like looking at metrics. All right, so looking at the matrix, we probably need to take that up.
That's still mental. I'm just looking at that. That just goes to show how expensive vol is, isn't it? Like at 68% vol, you're getting 11 points for that. That's 500 points of the money for about a week. It's just
8 days.
Break even 55.11, and so that takes us up all the way back up to here. And then if the market was to come off, and I know you would be watching and observing and seeing what else was happening around the world, but would would you move into a bull put spread if the market did something fairly predictable and came off, 300-400 points in a trading session or a couple of sessions? Would you look at a bull put, leave the bear call open and go to expiry, or would you close the bear call and look at a bull put? How have you been playing with it?
I'd look at a bull put, and then if I could close the bear call spread, I would, but I don't. In the current climate, I've tried that, and there's nobody home, so I doubt that would happen. I'd just be wary of it. But the level I'd probably look to take a bull put spread, sold leg would probably be down at either 4,000, and I know that sounds a long way off where we are, but I'm just looking at retracements on levels that were tested, and probably looking at about 4,000 sold leg and 3,900 bought.
Yep. Okay, but you'd be going into that trade, closer to back down at these levels here at 45 or 46, 47?
No, I'd probably, depending on the session. So if we had, and obviously the sentiment or news behind what's driving it. So if there's the volatility's there, and you can see that the panic selling, obviously that's the time that you actually want to take the action. It's the hardest time to take the action because it's against what you feel you should do. But it's in the absence of that, you don't get I suppose what you're hoping for is that either a market maker or a counterparty is going to be on the other side that is also experiencing that fear, but in the other way, and they want to, they're willing to sell what you're buying, or vice versa.
Okay. Yeah. That makes I like your approach. Now, if anyone's on this session, they're going, I don't really understand anything you're saying because you're new to options. Don't worry. This isn't that complicated, and we do education series to explain all of these things in a lot of detail. It's all free. It's part of taking a trial. And the other thing we do is if you wanted to sort of practice trade some of these ideas and some of the things we talk about, we put 50,000 fictitious dollars into your account if you take a trial of the platform, and you can just go in and sit there and during the day paper trade that money and see how it would work. And we have all the pricing models so that it's as close as to the real experience as it can possibly be. If you want to get a trial, just type in yes and we'll set you up for a trial. And you can just sit there. If you've got some time in your hands, you can paper trade, go through the education series and have a play around with it at your own leisure. Nathan, just within for those of online that are options traders, the challenges at the moment with getting your trades into the market and pricing your trades up, have you found that, and then have you responded to trying to get the best fills?
Sure. It's been really hard, particularly in the last probably 7 sessions. So at first when we were, market was coming off the 7,000 highs all through the 6,000 range, you had a lot of activity. Obviously, market makers were probably doing pretty well then. But once we, the bottom really fell out, and as I said, particularly in the last 7 sessions, it's been very hard. And you can actually see it if you're looking at options chains, particularly say in XJO, you're now only getting bid and asks really close to the money. And anything sort of, beyond, say, 200 points or 150 points from the money, you're seeing nothing. So it's really hard. And the only way that you can stand a chance to get your order filled, if you are obviously, looking to do out of the money, enter out of the money positions, is to just leave trades there. Sort of, you need to put them out there. I'm using obviously the theoretical pricing that your platform is giving me, and then looking at the ETR as well. And quite often I've been putting in values outside of the ETR because that fluctuates so quickly in this current market. So, and really just sort of, I like to call it like fishing, where you've just got to leave your trade there at the price that you would ideally want, and see if there's any interest that comes on the other side. And yeah, sometimes you get it, sometimes you don't.
And do you find that you get more interest at certain times of the day?
It's mainly around the if the market's going down and there's panic selling, or sometimes not so much when there's a whole lot of when there's a bullish session and then maybe market shoots up 5% like today. So yeah, it's more with the panic selling, and you've got people coming in at that point. Under normal circumstances, you probably you wouldn't have too much of a problem because there's generally a market maker who has a bot sort of looking at different offers that are out there, and if as long as you've got on your trade is around theoretical price, then they'll generally take it. But as it is at the moment, as I said, the market makers appear to be just nowhere. They've disappeared. So you're really relying on either having a price that's really good value to the other counterparty, or they've just got to be really desperate. So yeah, it's hard to get your trades filled.
Yeah, it's interesting. I mean, we nearly saw a few of these things as well. We were chatting about this on Saturday with Nathan. It's like there's opportunities there in some unexpected, especially in the weeklies, which aren't so transparently priced because of the dividends and not having a benchmark in the SPYs. It's just unbelievable. Like there's at one point it was offered. The spread that we were looking at in a Thursday webcast last week was actually, I was trying to get a bull put on, and it was offered at 44. Theoretical was around there. Vol readjusted within 5 minutes. It was at 21 or something, or 22, and it was offered at 15. And it was just like, if literally there was nothing to change in the market, just a couple of minutes. Market makers, I don't know, maybe they're sitting on super low latency computers in isolation and stuff. Maybe that's why they're not, trading as much. But it's amazing. I mean, it gives so much opportunity, as well as the downside where Nathan was talking about a trade that he got stuck in, which cost him a fair bit. So it's interesting. It's a double-edged sword, isn't it?
Yeah, definitely. And that's the biggest, the worst worst thing that can happen in this current market is being caught in a position that you would normally assume that you could get out of. And yeah, that's why I was saying before that the best advice I could give in this current climate is to assume that every trade that you enter, that you may not be able to close it.
One thing that I know, and there's a couple of questions here as well, but one thing that I know that cost me the other day is, again, I was trying to put in a bull put spread. It got to the match, and I should have really just paid up for 2 points, and I would have got hit, and I missed out on it completely. And then right in the match, the market jumped 100 points on me, and that was just, I was actually chatting to Pat about it. Was that Thursday or Friday? I don't remember. And we were chatting about it because if Pat was going to put the same trade on, we're like, but it was there, and then I just decided to be, stingy for a tick, and they say there'd be a prick for a tick. Anyway, I missed it.
It is hard though, because if you you do have to sort of stick to your guns as to what you want to get for a trade. If you do have to close it, then every tick counts. So it is sometimes in normal conditions you can sort of you can see where a counterparty or a market maker is sitting, and you can just go, all right, well, I'll give up two ticks and I'll just to get the trade over the line. But that can as I said, on the way out of a trade, that can be the difference where it's burning you. So
Well, it was interesting. I actually rolled the spread down by 100 points, and I nearly did it at 45. The first spread, which is I think a 48.50. Rolled it down till 47.50. Should have got it done around about 40. Was sitting on the bid at 44. Theoretical was at 46 or 47. Really should have got it done. And typical market again. I would have easily been done on that, and I didn't. Question for you from Justin is, you said, okay, so trying to get as far out of the money as possible. Do you aim for a particular delta? And if you are far out of the money, how do you reconcile the cost of trading against the premiums received?
Yeah, sure. So I'm not generally using the Greeks. I'm using some other statistical data and formulas to work out trading ranges. So basically, then I'm looking at within that or outside that particular trading range on the periphery. I've got other sort of tests to see whether it's the trade is viable based on the time and so forth. So if I can't get the premium, then I just won't do the trade. So often it's a matter of what I say, calls waiting for the trade to come to you rather than going after the trade, which generally ends badly.
Yeah. Okay, it's interesting. Yeah, but I mean, you go sort of next level in terms of you do take an extra standard deviation out. You do even that trade is sort of 1 to 8 risk reward. What do you typically have your risk rewards? I mean, do you sort of find them always been around that 1 to 8, 1 to 10 risk reward? Sorry, reward to risk, I should say in this case, ratios.
Sometimes further. So are you talking about say with a 100-point spread, looking at $5? Is that what you?
No. I'm just saying that. So your maximum profits in this trade, for example. I mean, this was obviously high level.
Okay.
Max profit was 113. Max loss 887. So
Yeah.
for you to get enough size on that to cover fees, you do put some sizable trades on, but ultimately you do risk a fair bit on those trades. Do you typically find yourself in that 1 to 8 range? I guess that 100 to 800.
Probably in the current climate, depends on the current volatility. When vol's at when XBI is at about 12, what's it at the moment? It's like 47 or 43. So when it's down in the sort of in the teens, probably a little less. But now it's sort of it's probably the sweet spot is about where that trade was at, what was it, 11 or 12?
Yeah. It's 11 and a half. Yeah.
Now, Mark has just made a sort of a comment. Mark was saying perhaps it'd be good to hear from Graham O'Brien, who's the head of equity derivatives for the ASX, about market makers. Mark, if you or anyone else has got any questions that you would like answered around market makers, put them into the chat box and I'll shoot Graham an email. We'll find it difficult to get Graham online at the moment because he'll be very, very busy. And also, I believe ASX are dealing with the same issues that we all are, which is working remotely. So it might be difficult to get him into a webcast in the next week or so, but if you've got any questions, I'm more than happy to get a message across and relay the answers tomorrow on the chat on our next big trade session. All right. So if anyone who's on the session today wants to come along to the next big trade sessions, will get invited to that. Just type in, I don't know, next into the chat box, and I'll organise for someone to get an invite to you. But if anyone's got any questions for Graham, shoot them into the chat box as well. And I will. I'll get you. I'll speak to Graham tomorrow and try and get him to shoot a response and relay that to you in the session tomorrow. Okay. Now, I'm not sure if there are any other questions we've missed out on, but we're getting a lot of inquiries. We've had a record number. Well, the implied volatility to reach trading business has grown 20% month on month for the last 6 months, and this month it's doubled. We have an unprecedented amount of people opening accounts and coming to us. So if that's something you're interested in doing, if you'd like to get an account with us, you can trade at the lowest costs available in Australia, and you've got the best technology available. The majority of the people on our platform, not the majority, but a lot of the people on our platform are very experienced traders that have been around and appreciate some of the things that we do and the edge that they can get from that. But you don't need to be. We're big believers in education, and we invest. Ivan and I run numerous sessions each week, amongst the many other things that we do. But for us in particular, options trading is something we're very, very passionate about. So if it is something you would like to get access to, just type yes into the chat box. We'll get you set up. For those that have said next, when you do that, I know David said interested in opening an account and a play account. Those play accounts, if you've got time, if you're in lockdown at the moment and during the day, you've got time to actually turn the market on, watch the market through that. You can use our platform. It's exactly the same technology as trading with real money, except we'll just put 50k fictitious dollars in there and you can play around and practice. And you can like quite often someone will say a strategy, or I'll be looking at something thinking, well, what would happen if I traded it? And I'll just put it in and put it in on my with the play money and see how it would work out. We also give you, if you wanted to go back and have a look at back testing and say, for example, go onto the XJO and have a look at, maybe go back to the start of March, something like that, and play around with, well, how would I have traded that? What could I have done? Then you can sort of see how would you have run if you'd used your strategies or your hypotheses through that period of time. You can use the back testing, go back at any point in time and have a look at how you're applying what you're doing and what sort of return it would have achieved for yourself. I'm just trying to think. Someone's vacuuming in my office, so I'm just going to go and tell them to stop. I'll leave you in charge for a sec.
Oh, that's dangerous. One thing that's actually quite interesting is, what you were talking about, or we were chatting about on the weekend, Nathan, in terms of getting data out. So that effectively is to do some, back testing and whatever else. We'll effectively utilize that data in the back testing and try and get that out at scale. For those of you that don't know, we're in the latter stages of doing a JV with one of the big four unis plus government-funded project to do a lot more research into options. There's going to be a group of PhD students that we get that'll come in and be able to run hypotheses for us, and we can do sort of some interesting things with that. Harley just asked a question: are you going to discuss the normal market? We're probably a little bit away from normality, but do you want to maybe quantify exactly what you mean by that question? Nathan, you've been how long have you been a full-time trader for now? I mean, it's been a couple of years, right? 5, 6, 7?
Yeah, about 5 years. Yeah.
Yeah, that's.
I've been. Yeah, go on.
No.
I've been in the industry since 2002 in warrants mainly. Yeah.
Yeah, just telling Patrick about your story. He's done a bit of warrants trading back in the day. But I think that Gary just asked a question about how can margin affect your account the next day if you're selling a call report. Gary, in the actual portal, you get access to free education. There's an actual video on margins. There's a whole explanation as to how SPAN works. I actually got involved in options. So I was a straight futures trader. I got involved in options when we had the change in margining system, and I became a risk SME for a major vendor, and because no one could just figure out how the margins work. So I actually have a lot of experience, and that's ultimately how I ended up in technology out of from trading, which was being able to break the stuff down. So that's that video on the screen. I actually explained it. It's like a 10-minute explanation as to how the span works and how the margining system works. But effectively, as soon as you sell options, you'll have margin impact your account, and then it's based on volatility and price.
Yeah, so that video is in there. You can just, if you're on the platform, just go into that section and you can access that. So anyone who takes a trial or uses our platform has got access to all the educational content, and we're constantly recording stuff and doing things. For the question before, Harley, or actually Harley's left the conversation. Didn't like your answer. But
I just said the market is a normal, and then yeah.
I think where the question might have been coming from, though, is we talk about what we normally do when we're trading and the trading rules and how we pick direction and the systems. We've got all of that reported into the back end, and we will be running ongoing sessions about that stuff and teaching you our rules and so forth. So what we do is, like in a period like this, we adapt, and which is what we did early on. Our style of trading changed, and we've been talking through how we've approached the market, the trades that we've personally been doing throughout that period. But the trading systems, if you'd only just followed them in the early days of the trading, you would be comfortably sitting back, happy to take a break from trading with the profits that you would have made with that period. But it's just what happened after that, which is the unprecedented bit.
You, Patrick, you make me laugh. I don't think I've been so engaged with the market like I have now for a very long period of time, and I know for a lot of options traders. I think that especially because even on the back of the call that I made on that day session just before the market fell, and then from then actually the interesting thing started. I think actually, to be fair, I think the interesting market is about to start now. We've had that massive flush out. I'm actually in Nathan's camp around. I think it's going lower. Where I probably disagree is I think the velocity of these upswings can be next level. I think that we can have these short squeezes that'll last for 3, 4, 5, 6 days. I think we're going to get some serious swing backs, and I think that typically the way that the poor retail punter gets busted is think about the most unexpected thing that's going to happen, and typically they'll do it, right? And they'll push stops. There's so much, this, like, if you think about the amount of people that are getting, I actually had a person from one, not very financial savvy, from one of the big comparison sites, email me today going, oh look, can all brokers effectively do short selling? And I'm thinking about going, can you imagine if one of these big comparison sites puts out an article saying, hey, by the way, one of the ways to get exposure to the downside is you can go in and short the market, and then suddenly you get all these self-managed, all the super funds withdrawing cash because of the coronavirus stimulus incentives, where people can draw down on their supers. Bunch of people withdraw money, supers just go on and pitch the shares, and then you got retail punters dumping shares, short selling into the market, and then suddenly you get a squeeze, forced margin call.
I had an interesting conversation with someone from the superannuation industry today, and they were saying that, it sounds good to say you can withdraw 20,000, but the logistics behind doing that, given that a lot of these guys are still paper-based, it's just not a reality for you to be able to take that money out. Like, how does that occur? Unless it ticks over from not, into the next phase. So anyway, I'm not sure what's going to happen there. Interesting times.
But they're saying that I saw an article where they're saying that there's not enough. They're actually asking the ATO to support because they've just been inundated with calls. I mean, whatever, no matter how you look at it, it's still going to be downwards pressure coming from that. self-managed super funds will start growing, and that'll be easy. Anyway, it's interesting. But I think that I think we're in for some serious times. I was saying to Nathan on the weekend, I started trading properly full-time during the GFC, and I remember these kind of, the moves were very different. The velocity is very different, and it's a reaction to the very long, non-stop bullish run that we've had for the record amount of time. So it's almost fair that now we get this massive reversal. But I think what comes next is going to be really exciting, especially if you're derivatives trading. I mean, even for people buying short-term stocks, I think that, we were talking about this, using options to go and acquire things like, BHP, CBA, BHP below, so I think it was trading about 27, CBA below 60, we were looking at things like that. So you're putting in bull put spreads to acquire the stock while just get some extra value out of that. And, take advantage of this super high volatility. But I think that for anyone who thinks that this is all going to die down, there's got to be a move in there where all retail piles into buying because they think it's over and everything's discounted by 35%, and then they end up another 15% offside. At least, Nathan, I'm going off your numbers. You seem to have studied it more than I have.
Well, yeah, nobody knows, but yeah, it's as you said, it's you do see those moments where you think that, oh, maybe this is all over now, and then bang. So it's nobody knows. And I think that the scary part is what's to come now, because up until maybe a few sessions ago there was sort of a clear direction, but now you're just getting mixed signals, and there's a few analysts from the big investment banks are saying, maybe this is a time to buy, so people start coming in thinking that this could be the bottom, and there's no shortage of analysts out there willing to say, oh yeah, I think we're at the bottom, but you always hear that wherever we are.
Yeah, exactly. So it's like my favorite guy, Shane Oliver, was saying that at the high, he was saying, no, it's going to go up, and then now it's down. It's like, oh, maybe I'm a bit bearish, but it's going to go up. It's like, okay.
Yeah, I think there's comfort in knowing that what I was going to say, there's comfort in knowing that nobody knows, and you'll get a lot of people who will put a lot of maths and figures and statistics around maybe this is the bottom, and then it's all of a sudden it's not, and they say, well, I thought that as well, and so it's going to be quite interesting in the next 6 months, to be honest. It's going to be a long drawn out process, because probably the only key thing that most analysts are looking for now is they're looking for a peak in the coronavirus infections as some kind of comforting factor that things are coming back down to normal. But yeah, and that's why I think overnight the European markets were up, because Italy showed for the first time not as great or an equal amount of new people testing positive or new deaths in a 24-hour period. So people are thinking, well, maybe the curve is flattening. So that's one of the things that I read that almost every analyst is looking for. But the biggest unknown at the moment is are all the sector analysts and revised earnings, and any company that's put out revised earnings really is in no position to do so at this point in time. So I'm not an equities guy, but there's not much noise coming from those guys, because really all of their pricing models have just been broken, and they're trying to grapple with getting their heads around where to now, because in terms of trading, like sessions and ranges and so forth, this is what we're going through now is on par or thereabouts with the 29 Great Depression, and there's a lot of sort of economic signs that sort of say that we could actually be this could go down in history as behind that the second biggest sort of event in that time frame. So watch your space.
Yeah, it could be interesting. And also, if you look at the way that the price actually traded, there was a lot of similarities drawn between. And I remember doing this, and people always thought that I was crazy, and ultimately very wrong on that. But or at least maybe not very. Maybe I'll have the last laugh. But when the 2009 move happened, there was actually a lot of the way that the way that the 29 market traded, it fell off, it came right back, there was this aggressive V-shaped recovery, then it actually went and retested ultimately pretty much the low, and then there was like a decade until ultimately the Second World War of just no real movement. And so, which ultimately was the after effects of the Great Depression. But the interesting thing is that if you're totally right. Fundamentals are totally broken. You've got no real, no one knows what the earnings are going to be in the forward earnings in particular. Everyone's just making up numbers now. Qantas is up 26% today on the back of securing $1 billion loan facility. Right? It's like, but it's still like they've burdened themselves forever now. Right? I mean, they're not paying that back anytime soon. It's just it's amazing, like the way that looking at this, it's you're right. I mean, it's at some point in time, this stuff is going to go in and come into things are going to stabilize. Earnings are going to become expected. Everyone's going to adjust. But in the meantime, it's just this is where understanding how technical analysis generally works, or understanding, more importantly, trend, you can, and the emotional psychology behind why someone's doing stuff, or lack thereof, rational psychology, this is the time when people make shit tons of money if they're aggressive enough and they're ballsy enough to admit they're wrong frequently and just reducing the size. Risk management focused. It's an amazing time.
Yeah, I think so. I think
definitely.
That with volatility where it's at, it affords you to do trades that you normally wouldn't be able to do, but also bring a payoff that you normally wouldn't get. But things are going to move quickly. It's going to be difficult sometimes to close out a trade, as Nathan mentioned. So might want to think about using smaller amounts and maybe trading more frequently or spending less time in the market. But, I mean, they're all things that need to be considered within each individual trading plan. They're just some of the observations that I've sort of got. Consolidation at this level, guys, what do you think?
I think that if we're talking about another 30% move there and there, so I think compared to what we've seen in March, it's definitely going to be consolidation. But I think
relative,
it's not exactly relative to March, so it's probably not going to be quite as aggressive. But I think that we could wake up tomorrow and we could be trading at 5,500, or we could be trading at 4,500. Right? It's just, I guess that's consolidation to some extent.
It's either going to go up or down. Okay.
Or sideways.
I'll be up all night watching.
I'm moonlighting as a broker by that. How are you going with sleep at the moment?
Please, Ivan, for that kind of advice. Sorry.
What did you say, Patrick? You just dropped out there.
I thought you asked a question. So it is, guys. Thank you very much for bearing with us tonight. It's quite difficult to run a session when there's 3 people online. It's hard enough when there's just me and Ivan online. But
so you're trying to say that if I wasn't here, the session would have actually been pretty good.
Yeah. Just put it that way. But thank you everyone for making the time. Again, the session that we're running tonight is really just reflecting on the market. It was an opportunity to invite Nathan to join us and give us some insights from another trader, another perspective, and to look at some of the things that are, that are impacting us on a day-to-day basis as options traders. For those of you that are here that are clients, we'll no doubt see you on the next big trade session tomorrow. If you would like to join it, again, type in next and we'll get an invite to you, or type in yes if you'd like to take a trial of the platform. The trial of the platform will give you access to all our trade ideas. It will give you access to our trade groups, all of the technology, live ASX data, charting, all the tools and calculators and everything, the back testing information. You'll get access to absolutely everything, and you can sit there, you can paper trade, practice trade, look at things that have happened in the past and come up with your own trading hypotheses, or watch videos about us talk about our trading hypotheses. As Ivan mentioned, we backtest everything we do in a lot of detail. We've got another 4 quants joining the team this year at some point in time in the coming months. We're super excited about that, and we'll be able to give you more ideas around trading and actually go and investigate some trades. Other than that, I think we've covered everything. Nathan, thank you so much for coming along. We've got to get you back again in the coming months. If you come back in, it was really insightful. I really enjoyed hearing.
Yeah, pleasure. Definitely. Yeah, anytime.
Yeah, brilliant. So next week we're going to, if anyone is anyone who's trading with us wants to come on and share some of their trades. There's been some absolutely killer trades made by people through this period. If anyone wants to come on and share one of their trades or talk about how they've been trading recently, please let us know and we'll get you on the session. Leah said the trial session is 7 days. Yeah. We upgrade it to 30 days, Lee, if you're on this session tonight. So if you want to take the trial, a 30-day trial, type in yes, and we'll give you access. And the trial gives you everything that you would normally have access to. So just type in yes, and we'll get you set up. A lot of people are coming over to us from CommSec at the moment. We hear that their margins are going up and they're restricting the types of trades you can do. So we have none of those restrictions in place if anyone is interested in coming and joining us. Beautiful. Ivan, thank you.
Thank you.
And I'll see you on the session tomorrow. Thanks, Nathan, and thank you to everyone else. Thank you and good night.
Thank you.
See you later, guys. Bye.
See you guys. Bye.